Welcome guys, this is the Astro Fx team, this is Nat speaking. Today is the 8th of July and this is the Technical Tuesdays, Volume 5. Before I pass you over to Sean, I just want to quickly talk about two topics that we always get asked about. So yeah, before we start, let's quickly go over them. The first one is, why Technical Tuesdays? Why do we give free analysis on our YouTube channel? What is that about, basically? And the first thing is, a lot of people don't know, me and Sean have actually been giving free analysis for nearly 4 years now. We've been on Facebook for quite a while, and Twitter also. So yeah, on there we've always given free charts, free tips and advice, free analysis, and also even sometimes free trades. So yeah, we're kind of used to always kind of giving back to up and coming traders, amateurs that honestly don't have a better idea. So yeah, always trying to help people, always trying to give back, basically. And also it's about showcasing our experience. Because of all of our ups and downs, that's what kind of brought us to this level, especially now that we're teaching people. You have to kind of go through the jump and leap into faith into Forex and kind of get hurt on the way down in order for you to kind of know everything, what's right, what's wrong. So yeah, it's all about experience, basically. The proof is in the pudding. There's a lot of courses out there which everyone I'm sure knows, and a lot of them can't even sometimes simply do a technical breakdown of a certain pair. So with us, even if you consider joining us, or even if you're trying to think about joining another course, at least you can kind of view our YouTube channel and think, okay, this is a principal thing that other teaching schemes or programs should be able to do. So yeah, just a kind of, the proof is in the pudding. Have a look at it. Seeing is believing, basically. And Tuesdays is actually a brilliant day to start trading. Monday can be very indecisive and can actually be very choppy. So for us, the way that we trade, just us, Tuesday is a brilliant day to start trading, start analyzing. And the second thing is, it's a little kind of messy situation that happened this week. We had some very amateur fraudsters trying to actually resell some of our Astro Fx guidebook kind of book, and basically, it's quite funny. They're actually, funny enough, called us one of the best courses they've actually seen. However, they're still trying to make money off us. So yeah, they're trying to resell our book for a few £100 less than what we sell it for. But with us, you kind of get it with the course. The book is a 15% part of the actual Astro Fx course. It's just there for additional support, and it's just there for just a bit of ongoing research and something for you to look back at. The actual course that we ensure and offer is, well, for the UK students, it's in the office, live charts, live markets. We watch you draw your analysis on. We don't move, or we don't finish for the day until you can actually draw and do a breakdown yourself of the market and know exactly what you're doing. And for our non-UK students and UK, it's all about the journey. It's all about our students getting back in contact with us, showing us how they've been getting on that week, kind of doing print screens of their charts. And it's an ongoing journey. Like, it's going to take a student, with the way that, how honest we are, it's going to take them 6 months and plus, 6 months plus, to always kind of be getting back in contact, always be progressing, because the market's never going to go nowhere. There's no rush. The market's going to be here 6 months, 6 years from now. If you can crack it in your own way, you'll be laughing all the way to the bank. So yeah, it's a very small part, and also it's also about investing in yourself. If you take being a trader seriously as we do, and this is something that you want to change your life, to change your career, don't go for a second-hand product. There's 90% of people lose in the Forex market, and what are the chances that 90% of people are trying to find the shortcut way around it? You've got to get the top 10%. You've got to know who is in the top 10%, and you've got to basically be wise enough to make smart investments. So yeah, the reason our course is what it is because of our experience, and because we've actually made the top 10%, and we have the verified results, we have the students. We've been sort of 3 months straight. So yeah, guys, if you want to invest in yourself properly and you want to do this on a serious basis, kind of be smart, basically. Anyway, I'll pass it to Sean, and let's start Technical Tuesdays. Bye.
Okay, yes guys, here we are again, volume 5, thank you Nat. So here we go, very quick. Again guys, I apologise for the lateness of this video. We had a few issues that needed attended to. We're extremely busy, and so on. Yeah, it's very late now, so I'm just going to run over as fast as I can. This one's going to be kind of short. As you all know, the pairs that we went over last week, I still hold all the buys for each and every pair. We had a bit of movement, a couple false breakouts, and back into the range, as you can see on the Euro USD here. Okay, so I did in fact just record all of this for 15-20 minutes, and I didn't have the microphone on. So here we go. I'm just going to go over it once more, really fast. Okay, so Euro weekly. Erase all lines. Okay, so right, we've been in this range for 6 weeks. 6 whole weeks in this range right here. 1, 2, 3, 4, 5, 6. Well, this is our 7th week now. As you can see, last week we did in fact close with a shooting star off the resistance level, but as you can see, we're in the range, and until we break either side of the range, we can't really give such a strong bias on this pair. But as we are in fact holding above this weekly high low, we are in fact still bullish, and we're above 200 moving average overall. And as you can see here, we are in fact squeezing up to this Ichimoku now, the Ichimoku cloud, which acts as a dynamic area of support. So let's just go down to the daily. Daily, my bias was in fact bullish upon a break of this, and as you can see, we hit resistance, bearish Harami formation 1, 2, and we fell back down. We can in fact put a Fibonacci on here, so as you can see, A, B, C, maybe this is D, because D also lines up with the flat Kumo, and the flat Kumo is 1.3750, and that is my next target level upon a break of 1.37. You know, as I say, Euro kind of choppy. As you can see, we did in fact highlight some. Opportunity here. We had the breakout, retest, continuation. Didn't get too far, and we were pushed back down. Tomorrow, guys, FOMC 7 PM GMT, so be careful. I'm going to be completely out of the market by 7 o'clock tomorrow night. But that could be the game changer here for the euro. Again, I'm still bullish on the euro, so A, B, C, D. D minus 27 extension also lines up with the flat Kumo, and then we have the minus 61.8 extension, which is a little bit higher. But if we do clear out 1.37, I do think we are going back to 1.4. In order for me to hold any kind of bearish bias on this pair, we would in fact have to take out 1.3500, 1.3480, as mentioned time and time again in the past episodes of Technical Tuesdays. But we're not seeing too much here. It's been consolidation for six weeks now or so. So let's see what happens after tomorrow. Okay, GBP USD. Here's my setup on GBP USD, which was posted on Instagram yesterday. Okay, so reason to get short would be a breakout, retest, continuation of this trend line. This is a 4-hour chart, by the way. And a reason to get long would be a breakout, retest, continuation of this counter trend line. So we have this the overall major trend line here, the ascending, and then we have the descending counter trend line just here. So a breakout, retest, continuation would take me long of the counter trend line. Breakout, retest, continuation would take me short of the ascending major trend line. Okay, so weekly bias, again, we broke out of huge levels. Let me just erase everything on here, and as you can see, Tuesday's candle did in fact push through. I think we did test an area of support, nearly hit an area of support. Also, I think I can see a Fibonacci. We are in fact still above this fib level here. We did hit the 38.2 and close as a pin bar. I am expecting some continuation to the upside. I'm still gunning for 1.7300 and 1.7322 just here. Okay, so again, you've just seen the setup on the 4-hour charts, breakout, retest, continuation of either one of the trend lines. But I'm 80% bullish on this pair. Again, it's going to all come down to tomorrow's FOMC. As you can see, we are fully bullish on the cloud, on the daily and the weekly, and we've just broken out on the monthly here. And I have been posting about this major level of resistance here, again 1.7350. So yeah, bullish on this pair. Let's go to the Aussie. Okay, so Aussie dollar, erase all lines. Monthly Aussie dollar, not much going on. We're still inside the cloud. The cloud did in fact turn bearish quite some time ago. There's still not a lot of clarity on the Aussie at the moment. As you can see here, resistance, support, resistance. We're just pushing against that resistance again, 0.9550. Let's go to the weekly. Okay, so weekly, going to just probably just this level here, 0.9600, 0.9700, the major two upside targets. But again, we could potentially say this is a double tap here, and we did have the bearish engulf, not the bearish engulfing, sorry, the shooting star last week's close. So immediate support right here. So we are in fact in the range 0.9200 to 0.9450, 250 pip range, which again we've been in for weeks and weeks and weeks. Not much movement in any of these major pairs at the moment in the market. So scenarios here would be, okay, so as you can see, we had this breakout last week. I was in fact long after this, and I trailed my stop up manually, and I did in fact get stopped out on this bearish engulfing reversal, and we've came down, and we've came to hit this level of support here and here, which again was mid-range. We've come back into mid-range support area. So yeah, as you can see here, these ranges are in fact around the same pip measurement / lengths. So when I break of 0.948050, we will be going up to 0.96, then 0.97. Cloud here on the daily, bullish. I do think Aussie can probably attempt another push to the upside, but again, it's all dependent on tomorrow. Okay, so next, Euro Yen. Had this drawn out in the last video. Weekly, another higher low. We are in fact sustaining the previous weekly higher low. Daily, again, series of high lows. We are in fact in this channel. So two scenarios here. This is the Euro Yen hourly. We could, in fact, if we manage to sustain above 138.10, which is Tuesday's high, the candle that's previously closed at 10 PM tonight GMT, an hour and 20 minutes ago. If we can sustain above that, we may see a breakout, retest, continuation of this counter trend line here, and all the way back up to 139.30, 139.40. What else could happen here? We could indeed see a break of the 138, and we could go all the way down to 137 and then maybe 136. We do in fact have some yen news. We have yen on Thursday, and let me just double check. We had the Bank of Japan's interest rate decision on the Thursday, so maybe not too much of a clue for major direction until that interest rate decision on Thursday night late on. But that's the two scenarios. Yeah, two scenarios for Euro Yen. Okay, so moving over to GBP AUD daily. Okay, so last week I didn't really give any bias on this. I didn't really want to confuse people because I have been bullish straight after this this pin bar here, which did in fact come off a well-known level of support. Again, super bullish cloud. Last week we did in fact see some momentum to the upside, and we do have the Kijun Sen here, which was cap price just below. So let's go down to the daily. Again, we're held. We have, in fact, we do keep coming up to this level, 1.8300. Say we did spike above that, but as you can see again, candlestick formation here, Harami, bearish Harami, 1, 2, 3 bearish candles. We're now resting above the 200 exponential moving average, which is a sign of bullish momentum. So yeah, we have the moving average crossover the Kijun, and we are in fact bullish here. So overall views on this would have to break the 1.38 handle once again. If you can sustain above that level and see some momentum, 1.8600, I think we could do another 300 pips to the upside if we do sustain about that above that level. On the downside, maybe back down to this 1.7850 range, and the range that we've been in for some time now. Okay, so let's just go down. Yeah, we did in fact break out of this pennant. We did have a pennant here. Yeah, we did break out of this pennant, breakout retest continuation to the high, and for you guys who know how to trade pennants, flags, triangles, so forth, you can take the length of the last leg, add it onto the breakout, and then yeah, it's kind of got a confluence with our major resistance at 1.8600. So if we do break back above here, then yes, I do indeed think we can come up to, for a nice 300 pip run to the upside. Again, GBP might see some more strength on the GBP USD, GBP AUD might follow suit. Okay, so people, just a really short one today because the market has not moved a lot since last week. I am waiting for tomorrow's news, not tomorrow's, tomorrow, sorry, the FOMC, to see what it will bring for the dollar and the euro. Again, just before we go, I can just go over to the USD Swiss. As you can see, lower high, lower high, lower high. So again, we are printing downtrend momentum right here to the downside. USD Swiss franc again, 0.8700, major support. As you can see, we've been in this range for quite some time now. So again, correlations, we might have the moving average crossover here to the downside, which may push our euro higher, but we don't know until tomorrow. So I'm going to start putting some posts up on Twitter tomorrow night. Keep you guys updated via Instagram and so forth. So bullish buy is still on euro, bullish on GBP to 1.73. Aussie dollar, I'm kind of in two minds because the monthly and the weekly aren't showing me anything too tough for a bullish momentum, but again the daily is in fact showing me we are above this support at 0.9300. We would in fact have to break below 0.9300 in order for us to maybe come back down to 0.92 and beyond, but again, as long as we sustain above that level, I do think 0.96 and 0.97 can be seen quite soon. So again, bullish on that. Euro yen, two scenarios on the hourly. Break them two scenarios. I do not really have a bias for this until the interest rates are released on Thursday. And GBP AUD, I'm looking at 1.8600. So yeah, that's all I'm going to really go over today. Nice and sweet. We're very late here. It's been a tiring day. So yeah, hopefully we'll get some more volume in the market, and by the time we do volume 6 of Technical Tuesdays, we are open to all your questions, comments, observations. Please shoot us an email at contact@astrofx.com, and yeah, we look forward to hearing from you guys. Okay, so thank you very much and good night.